Let's welcome in our morning guest now. Ruchit Jain is now joining us. Siddharth Sadani will be with us, as well as Shrikant Shetty will join us soon. Ruchit, what are your top picks to play this week? Where do you think the momentum is looking strong?
Hi, good morning, Pankaj. Pankaj, a couple of picks that we have seen in last 2 weeks, which have given good momentum. One is M&M. During last week, we have seen the stock had given a breakout from a falling trendline resistance, and after the trendline resistance breakout, the prices have consolidated for 4 to 5 trading sessions. Now, this has led to formation of a flag pattern. As per technical analysis, this is a bullish pattern, and once the breakout comes, I think we should see good momentum coming in Mahindra and Mahindra. So at current levels, we are advising to go long on Mahindra and Mahindra, keeping a stop loss below 1230. We are expecting targets around 1430 on the high side. And my second pick is a buy call in Voltas. We have seen that Voltas, the broader degree trend is up. It has been forming high top, high bottom formation on the weekly, monthly, as well as the daily charts. Now, what has happened that within an uptrend, the prices since last 1 month has consolidated in a sideways range. So this is probably a time-wise correction rather than price correction. And post this consolidation, during Thursday's trading session, we have seen the prices have indicated resumption of the broader degree uptrend, that too with very good volumes. So we are expecting this uptrend to continue in Voltas. The risk-reward ratio is quite favorable at current levels in Voltas, so one can look to go long around 400 and between 415 to 418, keeping a stop loss below 405. We are expecting target around 460 probably in next 1 to 1.5 months time frame.
Right. Ruchit, let's talk about some names as well. So ACC and Ambuja, both these stocks will be in focus. ACC and Ambuja both are exploring merger opportunities. We'll just go to the details in just a bit. But Ruchit, if you could just look at Ambuja and ACC and tell us about the uptrend in these names.
Technically, both the stocks are looking fine. In fact, if we first, if we look at the entire sector, the cement sector in last 1 month has given a good showed a good positive momentum, that too with increasing volumes. ACC has been one of the leader. During last month, we have seen a good breakout came, and post that prices are moving higher, that too with increasing volumes. I think we should see levels around 1700, 1710 coming in the stock in very short term. Even Ambuja cement, although prices have consolidated in last few days, but I think this consolidation is just a part of the uptrend. Recently, the prices had given a breakout, and this consolidation is just after a breakout. For intraday, I think our levels around 263 to 264 should be seen. But positionally, we believe that the stock has potential to rally up to 278 to 79.
Well, both these stocks would be in focus because of some news developments. What we're picking up is that ACC and Ambuja are exploring merger talks. So the talks are underway, and these possibilities exist about merger. They have formed committees of directors for evaluation of this merger. Both boards, though, have cautioned that there is no decision that has been taken so far or at this stage about a merger. And Ambuja, do keep in mind, had bought 50% stake in ACC last year. So already some sort of consolidation was taking place. Now, if a merger comes through, what will be the impact on the two companies as well as the cement industries? Analysts believe that the merger will drive synergies via savings across across different heads, and the merged entity will save a lot on logistics cost. So this is something to watch out for. Pankaj, of course, the Competition Commission will have to come on board with this because it will lead to a large cement entity being made.
Right, Anisha, but they already own 50% into ACC, so I don't think that will be a very big problem, because it's already the same promoter group company. And always there is this question, why have two brands? Both the brands independently are so strong. Both the brands are reaching across India. Every place, you have seen both Ambuja as well as ACC having a significant amount of presence. So why have two brands? Why spend on two brands? Why have two logistics which are different? And that's why always this merger arguments come in. But now that the management has told, you can see the pre-open price, it's already indicating a 6% higher start for Ambuja. If it happens, it could lead to material synergy benefits. They may continue with both the brands. However, once it becomes a part of the same group, at least the logistical problem why have two CEOs for similar business? Why have two different boards for similar business? All these questions would actually be answered. There has been this argument that why they should have two companies, and now finally, once the management has said that they are looking to merge these two companies, Ambuja Cement is up 6%. ACC, I think, is yet to open, but if the merger has to happen, both these companies have to go up or down in a certain ratios. So that's essentially a sector, a stock which will be in focus. Let's welcome in Shrikant Shetty. Shrikant, what's your call on Ambuja ACC, especially considering that the board is looking at a merger? It could lead to a lot of synergy benefits.
Yeah, we do anticipate synergy benefits, and overall, if you look at it, these are companies which have been a bit slow on the capacity expansion. Only thing is that if the management bandwidths more focused tends to be on the consolidation and the implications of the consolidation, then maybe the capacity expansion which is happening by larger other players, that might not happen by these companies. So that could be a slightly lag. But otherwise, yes, there is consolidation benefits which could happen. And if we have seen, Gujarat Ambuja has been a big underperformer earlier. So that could see some potential outperformance here. Of course, a lot of things depends on the ratio, how the ratio ultimately pans out.
Right. Also, if you could just tell us, Shrikant, that there has always been this argument that why have two such strong different brands? So once that happens, a lot of cut in marketing spend, logistics spend, all of that would be natural savings for the company.
So there is bound to be savings. I mean, how it plays out, we need to see over a period of time, because as of now, on a broad basis, yes, there is fair amount of material savings which can happen. That's what is expected. But as I said, Ambuja has been a slight underperformer in that sense. Depending on how the ratio plays out, there can be a little bit of upsides for more upsides for Ambuja slightly.
All right, Shrikant, how would you evaluate or approach some of the PSU bank stocks now? The government has notified the ordinance for the Banking Regulation Amendment Act, giving more powers to the RBI. Plus, a number of appointments have also been made. So this also gives some long-term visibility to changes or good management at PSU banks. Do you think they're overheated, or do they still offer a good investment bet?
I think if we start seeing serious NPA resolution of some of the large accounts, I think then yes, there is scope for more upsides here. We would prefer some of the larger names like SBI, PNB, BOB in that order probably. But we need to see how it progresses, because we have seen developments in the NPA resolution keep happening, but ultimately the resolution has not been actually happening on the ground. So while developments are positive, we need to see how it actually plays out, how the action from RBI, given that there's more powers to RBI, it should be positive. We do see potential resolution happening. To some extent, the markets have been anticipating this ordinance to come through, and we have seen rally in PSU banks in the last 1 month, 1-2 months or so. So some amount of pricing in also has happened in the markets. So we need to be watchful as to how and what extent of benefit this results in, and actual resolution of NPA. We need to see how it plays out over the next 6-month period probably.
Shrikant, but when the resolution takes place, there will be haircuts that will have to be taken, and profitability could come under pressure. That will affect the valuations. Then how do you compare PSU banks and private banks? How do you take an investment call?
I think haircuts will happen. There is bound to be haircuts, because if this has to get resolved, there will be haircuts probably from promoters and bankers both, and that is a need to do that, because otherwise it is a stalemate scenario which we have seen continue for quite some time now. So additional powers to RBI will actually help end this stalemate and bring some resolution. That is what is the expectation. So haircut is not a problem. I mean, if you look at provisions made by PSU banks or corporate or other even private banks with large corporate exposures, they have done a fair amount of provisions for these. So if some amount of haircut needs to be taken, I think that's probably factored in into the prices, and to some extent the provisions will already be there in the books.
All right. Ruchit, how do you view some of the airline stocks? We've seen a sharp correction coming in crude. There is an OPEC meeting later in the month coming up. But given the weakness in crude, do you think some of these names that benefit from lower crude, like airlines, could gain more ground?
Yes, definitely. Even if we compare do a comparative analysis of crude oil versus airline stocks, then mostly they have been moving in the opposite directions. So looking at that, definitely I think if the crude prices correct sharply, then that would give a good benefit to, in terms of price movement in airline stocks. Even technically, if we individually observe, then Indigo, looks much better within this airline packs. We have seen this stock recently after a consolidation phase has given a breakout, and the volumes in the recent up move has started increasing significantly. Definitely one should take a positional perspective and not a very short-term outlook on this. But I think the way this volumes have panned up in this recent up move, all the airline stocks definitely could give good returns even from current levels. Indigo, we believe that on the higher side, 1250, 1260 is quite possible in this stock. And on the lower side, the stock has a very strong support base around 1070, 1080 range. So risk-reward ratio wise, we would prefer going long into the in Indigo at current levels, keeping a stop loss below 1060 and expect target around on the higher side around 1250.
Right. Siddharth Sidani is also with us this morning. Siddharth, good morning. What are your top picks?
Good morning. Well, we believe that from the consumption theme and of PVC pipe segment, we like Supreme Industries with a target of 1450. If you look at the numbers, quarterly numbers, we've seen 8% growth on the revenue front. Margins also expanded to 19% from somewhat 17.9 to 18%. Overall perspective, company has a strong positioning in terms of value-added products and expect a strong operating margins from value-added products. So they would like to focus on this value-added products and increase the revenue contribution. Apart from this, company has a capex of 300 to 350 crores. So some of the greenfield projects which will be coming up in the southern part of the country, northeast, everything would be internal accruals. Management expects and giving a guidance of 5200 to 5500 crore revenue for FY18. Overall perspective, this company looks very interesting with a target of 1450. The other company would be Cadila Healthcare, again a strong leader in terms of pain management, in terms of female healthcare and respiratory. 35% is from the US market. We believe that US market, it is most growing company in the US market. We expect 40 to 50 products to get launched every year for Cadila Healthcare. Overall perspective, what we expect is 19% and 40% CAGR growth for the company in terms of revenue and PAT for between FY17 to 19. Cadila Healthcare in the entire pharma segment looks the most interesting with a target of 531.
Right, pharma sector was one of the weakest performing sector last week. Let's see how it does today. We spoke to you about Ambuja Cement. That will be a stock that will be in focus in terms of results. Eicher Motor will be the big one, which has given a number which is in line, but I think the guidance is decent. So that could also attract a lot of volumes. It's generally not a very highly traded counter, but because of results, of course, that will be in focus. And some of the other mid-cap names like Apollo Tyres, names like Equitas, NIT Tech, all these companies will be in focus. Some of the numbers were good, some of the numbers were a miss, so we'll just wait and watch. So these are first trades for you. Ambuja Cement's first tick on your screen is up 5%. It's a stocks in news. It's now up 7%. ACC is also up 2%. So clearly, markets are favoring in that Ambuja will get the benefit of this merger, and that's why that's up 7%. But I would not be surprised if ACC also actually goes up, because the merger ratio at the end of the day would lead to a similar movement. It's very difficult to predict what the merger ratio will be, but both these stocks are in focus now. Ambuja is up 7, ACC is up close to 2. BPCL on your screen absolutely flat. Eicher Motors, that's a results reaction. 2,000 shares only in terms of volumes, but 26,500, that's about 666 rupees higher now. Hero Motor Corp, 7 rupees lower. Cipla absolutely flat. HUL 1 to 2 rupees higher. M&M is up about 2 rupees. Again, no major movement on M&M, no major volumes as well on M&M. Ambuja Cement is up 6.5 now. 1 million shares already traded. Remember, we're not even a minute into the trading session. You've already seen 1.1 million shares in terms of volumes. That's SBI for you, about 50 paisa lower. Hindalco is absolutely flat. Axis Bank is up 2%. Reliance is up close to 2 rupees. Not much, 13.30. Last week was among the big underperformers. ACC, I told you that both these stocks have to move in tandem if there is a merger with the market is pricing in. It's now up 6. It opened up 2%. It's up about 6% right now. HDFC Limited is down 6 rupees or so. Last week was among one of the stocks in focus. BPCL 722, 2 rupees down, or about 0.25%. Tata Motors DVR up around a rupee. Indiabull Housing Finance has done very well after the results, 4 rupees higher. It also got 12 rupees ex-dividend, so you add for that and it's clearly an outperformer. That's Aurobindo Pharma for you, 24,000 shares traded, 594, 595 for that name. Asian Paints, 6 rupees higher. 1153 was among the top gainers on Friday because crude fell. Crude is an important raw material, so maybe a follow-up sort of a name. Lupin, there has been a couple of upgrades. One has come in from Nomura, the second has come in from Kotak, so that will be a stock in focus, but it's just 3 rupees up now, so maybe there are some sellers into that name. Wipro down about 3 rupees. Yes Bank up about 8 rupees. 11,000 shares, 1,606 for Yes Bank. Bharti Airtel 2 rupees higher. Bharti Infratel declares numbers tomorrow. Airtel declares numbers Bharti Infratel declares today, Airtel declares tomorrow. So that's why it's a stock which will be in focus this week. It will be the first telecom company, second quarter of impact of Reliance Jio. So let's see what do they declare. Maruti up 8 rupees, 6,662, 6,602. Eicher Motors now up 2.6. Dr. Reddy's up about a rupee or so. Bajaj Auto is up close to 13, 14 rupees. Nifty is now up about 24 points. So it's broadly in line with what SGX was indicating. I think it's just settled around the first pivot, and cement, of course, is the sector specially led by Ambuja and ACC, backed by corporate action.
Right, let's also take a look at some of these stocks that are reacting to the earnings. Avenue Supermart, that stock is down 1% on its earnings. Equitas is down 3.5%. NIT Tech came out with a strong set of earnings. That one is up 3%. Gati is down 3%. It came out with its earnings. And Blue Dart is also facing some pressure, down 2%. All of them reacting to the earnings at this point of time. Let's also pull up Shoppers stock for you. That stock is down 5%. It posted a loss in its fourth quarter earnings, and that one is facing pressure now, though it's recovering from the lows of the day, but the markets have given a thumbs down to those earnings. The Polo Tire is also down 2%. Gillette today is up 10%. This is a smaller FMCG counter, but doing well on the back of reasonable earnings. Pankaj?
Right. Let's just look at some names. So Avenue Supermarkets is now down 2%. That's reacting to numbers. Numbers were not particularly that bad, but still it's down 2%. Maybe expectations were higher or for a beat. Numbers were in line. Volumes are also pretty high today. So that's down about 2.5% odd percent. 786, 787 for that name. As we are speaking, it's hitting days low. Let's look at some other gainers as well. So we spoke about the cement pack, but in the mid-cap space, Walchand Nagar Industries is now up 9%. That's around 161 for Walchand Nagar Industries. So that's doing well, and volumes are, mind you, also not pretty low. So that's also a name that is doing well right now. NIT Tech is up close to about 2.5 odd percent. So that's a name which is doing well. NIT Tech, of course, is also reacting to numbers. So not much to read, but that's essentially what you can pick up. Apollo Tyres is down 1%. Equitas Holding will be talking at 10 a.m. Gati is down about 2 odd percent. Dalmia Bharat Sugar is also reacting to numbers. Max Financial Services is also down about 2.5 odd percent. Shrikant, let's talk about Avenue Supermarkets. What happens when the company is trading at such high multiples? Maybe there was a miss of around 1% or 2%, and that's exactly what the markets are factoring in.
Yeah, I think, the expectations are very high in terms of growth here, and the valuations are really rich. So any disappointment or even a slight disappointment can lead to correction. Also, it could be just post results, profit taking also coming in. So there could be some correction on account of that.
Right, but what do you do with the retail sector? So recently we had some few block deals on future retail. You had this listing. We spoke to V-Mart last week. They sounded quite positive about FY18. Do you think despite e-commerce, the buzz over there, retail businesses would do well?
So we need to monitor how things play out. Obviously, if you look at Avenue Supermarket, they have been able to deliver very strong growth, both in terms of top line and bottom line. Not all other companies have been able to do that. So one of the few companies which have been able to deliver this kind of growth. So that definitely looks from business model perspective and the way it has been functioning, it does look positive from a longer term perspective. The valuations are rich there elsewhere.
Right. In terms of real estate, what will be your call, Shrikant? What do you do with names like DLF, Oberoi Realty, any other real estate name that you like?
So we have stuck to, if at all we have had any investments in real estate, we have stuck to names where I have cleaner balance sheets primarily. Otherwise, we have more or less looked at DLF or others like more as a trading play rather than as a serious investment kind of investment play. So it's probably Godrej Properties or Oberoi Real Estate. I mean, these would be probably names one would look at from a more longer term investment perspective.
Right. Ruchit, what will be your call on ICICI Bank? It's up 1% now. It was up 12% last week. It's followed by very good volumes of 2 million shares today.
Yeah, Pankaj, if you see the positionally, then this stock has consolidated for a period of about 2.5 months. And after this consolidation phase, post results were declared, the stock had given a gap up opening in which the entire resistance was broken out with a gap. Not only the resistance was broken out, but also if we see the volumes post a gap up opening, then that definitely indicates the good buying trigger has happened post this breakout. And I think this would lead the stock further higher in near term. On the higher side, we should see levels around 324 coming in the stock. So I don't think there would be any significant declines would come in the stock, at least in near term, and we can expect targets around 324.
Right. Any view on Cummins? Now, that's a stock that also did well. It's also opened into green right now.
Cummins, if we observe, then high top, high bottom structure is in place in the stock. And earlier, when 942 was a significant resistance for the stock, during the first week of April itself, the stock had given a breakout of that resistance. So the overall trend for this stock is positive. The stock is going to find very strong support around 940 to 960 zone, and on the higher side, the earlier previous highs which were there around 1190, 1200 zone. I think the stock should test those earlier highs again.
Right. Siddharth, ACC, Ambuja, of course, are the stocks that are buzzing right now. We spoke to the other guest earlier before opening. What is your call after a 5% move on Ambuja Cement and ACC? Have markets been very efficient? Have they factored in what essentially could be the benefit going ahead?
Well, in terms of cement pack is concerned, in the large cap space, definitely there is a lot of positives which is coming by. But what we are constructive on is on the mid cap cement pack companies like Dalmia, Ramco, or for that matter Birla Corp. I think these companies we are quite constructive on, although the kind of initiatives which government is taking, housing for all, affordable housing, definitely the cement consumption will be increasing. Of course, the public spending and the infrastructure spend is always there since 3 years. But I think overall perspective, the dispatches can increase. So for that matter, mid-cap cement companies in terms of valuation looks little healthy in terms of investing at the current levels rather than large-cap companies.
All right, prefer mid-cap cement companies. Shrikant, how would you approach some of the retail names? We've seen earnings coming in from D-Mart, Avenue supermarkets, as well as Shoppers Stop and V-Mart. While some retail companies are doing very well, you can't say the same about the others. You can't paint all of them with the same brush. So how should investors approach this space, given the GST is due to come out as well?
So I think investors should look at which have been able to deliver. I mean, the one business model which is successful is where you would like to invest in, rather than try and venture into into companies where you're not sure about whether the business model is playing out. So if you want to stick with a retail name, probably then there's Avenue Supermarket. That's probably the best one to be from a long-term perspective. The only point which I was trying to make given earlier also is that the valuations are a bit rich. Given that, yes, it's a business model which is doing well, and they've been able to grow the business very strongly, and there is strong visibility of growth as well, at least for the next few years. So in that sense, that's a stock to watch out for. But valuations are a bit rich, so maybe on a correction, that's a stock to look at.
All right. Ruchit, have you had a look at some of the PSU names like PFC and REC? We have a IPO opening up, Hutco. Do you think there may be some interest coming back to the PSU financiers?
Yes, in fact, already we have seen a good momentum has been set in this both these names, PFC and REC, since last 3-4 months. And the way the momentum is going on, not only on the short-term charts, even on the longer degree charts, the weekly as well as the monthly charts, the stocks are indicating much higher targets from current levels. So I think even from a short to medium term perspective, traders should any kind of declines it comes, then traders should look to buy these names. REC specifically has shown outperformance within both these names, and generally when generally when any of the stocks within a particular sector are in the momentum, the one that shows outperformance in the initial stage, they continue to tend to outperform. So I think any kind of declines, REC should be looked to buy. 200 has become a very strong support base now. In this entire up move in last couple of months, 20 days of exponential moving average has not been breached, which is now placed around 200. So we can expect that 200 is a very strong support base. I think if we get this stock somewhere around 200, 205 range, that should definitely be used as a buying opportunity. On the higher side, we could see levels around 245 to 250 coming in the stock from next 2 to 3 months view.
All right. Siddharth, you said you have a preference for some of the mid-cap cement counters. Would you have a similar preference for IT stocks as well? NIT Tech, Hexaware, something like 8K Miles. These stocks have been buzzing and have been doing well as opposed to the heavyweights like Infosys and TCS. Would you then lay your bets on mid-cap IT stocks?
Of course, we would like to take a contra call on the mid-cap IT stock rather than large-cap. In the mid-cap IT space, some of the result which has not done that fabulously well, but still we are constructive and we are quite optimistic on the performance going forward. One of them would be Persistent System. The kind of IBM the business will be coming up in terms of IoT is concerned for Persistent System. I think the bottom line will be coming up very soon for Persistent System. Digital business has been doing good. Same way that where the numbers are really good is Majesco or Cyient for that matter. We believe that these two companies also can be a good performer in the medium to long term perspective. Valuation wise, of course, all these companies are beaten up and generally said that there is a lot of there is a lot of fluctuations in terms of earnings are concerned in the mid cap IT space. But for these companies, that is Persistent, Majesco and Cyient, I think the road is quite comfortable going forward in next 2 to 3 quarters.
Right. Ruchit, last week metal counters saw deep cuts. How would you approach Hindalco, Vedanta, Tata Steel and JSPL?
Well, I think one should be very stock specific in these names now because after a good trended up move, firstly the stocks had consolidated in a range for I think 1.5 months, and now during last couple of weeks some sort of selling pressure has come. This does not mean that the trend has reversed for the stocks. I think this is just a kind of profit booking which has been seen after this significant up move. Within this space, Tata Steel is one of the stock which has now approached its crucial support of 200 days simple moving average, which is placed around 420. Apart from that, if you see Hinzing, then Hinzing has given a breakdown of weekly 20 EMA, which was a support during this entire uptrend. Even Hindalco, the way during last week, this stock was looking that it would move higher, but the way we have seen a good amount of profit booking coming in the stock. I think this stock for at least for next couple of weeks or for next 1 month, we should see some sort of consolidation or continuation of this corrective move. Although that would be a part of a longer degree uptrend itself, but one needs to be very stock specific now. And among this pack, Tata Steel is has now approached its crucial support. So I think if anyone wants to go long or wants to pick any stocks from this sector after this corrective move, then Tata Steel would be the top pick.
All right, Tata Steel is a top pick from Ruchit. Shrikant, how would you approach the metal space? You know, there seems to be disbelief. There's a reflation trade. I don't know why it's pettering out because growth in the US is strong. Not too big worries coming in from China. Do you think this is a good opportunity to accumulate some of these metal names? How would you approach them?
See, from a trade perspective, I think overall positional trade, I think still metals remain a positive side. But recently we've seen some corrections coming in through in the global commodity prices, and that's where we are seeing some of these stocks move into a consolidation mode. If you look at even for that matter crude or even copper, some of the names have been correcting. I mean, iron ore prices have moved back to lower levels. So some of these commodities have corrected back, and that's where there will be some nervousness or volatility in these names. But from a more broader perspective, I think steel, if you want to participate in steel, domestic steel companies like JSW Steel, I think still looks positive. Hindalco will be positive on among the non-ferrous names. So those are the preferred ones at current juncture.
All right, gentlemen, thank you so much for joining us on NDTV Profit and sharing with us your top picks as well as views on all the stocks that we've discussed. As you go, please leave us with the disclosures. Ruchit, any disclosures?
I don't personally hold any of the stocks that we have discussed or recommended, but both the stocks which we have recommended, Voltas and M&M, similar set of recommendations have been given to our clients.
Shrikant, your disclosures?
No personal holdings, but yeah, our clients may be holding onto the stocks, or we may have recommended them the stocks.
Siddharth, your disclosures?
No personal holdings of the stock discussed, but my client and organization must be holding. Thank you.
Thank you, gentlemen, for being with us at NDTV Profit.